Hello, traders. This is Michael coming to you from GammaEdge on Monday, March 17th with our pre-market morning strategy and briefing session. As always here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. We're currently looking at our market trend model. In the overall look, the red below cyan, which is our longer term colored ribbon, is still in a bear state, as we do have these tag combos indicated here. Make sure you're reviewing those within our overall GammaEdge framework, understanding the emphasis and what those mean. We did see some bullish development on Friday towards the end of the day. We did have our first TC8 trigger. This is a close above the previous day close, as we've discussed last week, or as I discussed and we did here at the GE team multiple times. This was our first step towards looking towards a possible rebound or bounce to the upside on a bullish looking state. And then we also had our TC10 trigger. This is our shorter term moving averages stacking in the proper direction with a positive slope. As you see those flipping from the negative slope of the orange, blue, and white there back towards the proper stacking order from lower left to upper right. So if you review back over here on 3.7, we discussed that we were not really going to get a TC8 trigger on the close here, so we weren't looking for any bullish move. And then as you see, the downtrend continued. So again, first step in the right direction for the market to bounce. Again, very early on, as we've discussed multiple times. So what we would want to see moving forward is on open mic last night, Paul and Taylor, I think, did an excellent overview of what we would need to see step by step for the market to turn direction. So make sure we review that last night. But in a quick overview, we would need to see these TC8s continue to add up. So you'd need to see the previous day close above the previous day close above the previous day close and continue to stack onto each other. And then we would start getting some other triggers to the upside, and then the bolded CT would be moving from lower left to upper right, as well as the shorter term moving averages, which are railroad tracks. Those would also be in positive slopes. And then most likely we would start running into the overhead colored ribbon, and then we'd start looking for some sort of consolidation. Or if we did move through the colored ribbon, then obviously we would be looking for a more bullish look and longer term move to the upside. So again, early on, first stages, don't get out over your skis. We discussed on Friday possible doing some trial balloons on some leveraged ETFs. Again, understanding that if this fails very quickly, you would exit the trade immediately. So if the bolded CT starts crossing back below the moving averages, we would look to exit those early on trades. So this is where progressive exposure comes in. If you're looking to get to a full position, if you're a swing trader on leveraged ETFs, this would be your first starting point. This might be a third or a quarter position. These are just trial positions to see if the market is starting to stabilize or consolidate. So if for some reason that trade fails, you do not have a large hit on your overall capital. So that's how we'll be looking at that moving forward. And we'll be intently watching this bolded CT intraday, as well as the moving averages, to see if they maintain this bullish stance and look. Moving on to the SPXP, all expiries turned on. We are still put dominated, but we are seeing some improvement, very small improvement. It's going to take a significant amount of time to repair the structure. This doesn't happen in one day. It happens in multiple days. So understanding our tools via the open mic last night and what we want to see continuing to improve day over day. Obviously, you want to see the left-hand plane, which is below spot price. You want to see this start to change to green, net delta. These would be in the money calls below spot price. Those become then supportive on any pullbacks within the overall price action. Again, we are significantly in the money put dominated above spot price still. So this will have to repair rapidly. This will be the slower repair. Your left-hand plane might repair a little bit faster just due to spot price moving up and possible put monetization. But this overhead, we will have to start causing some fear in these in-the-money put holders via price appreciation. Moneyness matters. So these holders are sitting pat and happy with their profits so far. But if those profits start to decay or start to lessen a little bit, then we might see some sort of monetization and then exposing some in-the-money calls. Now, closing of the in-the-money puts above you can only go so far, as we've discussed multiple times. We need to see out-of-the-money call speculation for price to move up. Again, adding positive deltas to the book. So we'll see if that changes or if that continues. But again, this is the very early on stages of seeing a structure repair. If you're new here to GammaEdge, or if you've never studied option structure, this is what you'd be looking for. Go back and review the open mic again, I'll say that. But this is, again, the first stages of the overall structure and sentiment repair. Does it crumble and fall apart within 1 to 3 days? It definitely could and possibly could. That's why we say progressive exposure, smaller position sizes if you're looking to get long. Nothing says at this time that the market is going to have a significant run up. So we want to wait. As I always say, I want to catch the meat of the move. I don't want the bottom 1% or the bottom 1 to 3%. That's the hardest 1% to 3% you'll ever gain in your life in P&L. I want the middle section. I want the middle 8 to 10 to 15 to 20% run up when the sentiment and structure and trend change and they're all in confluence saying, hey, everything is looking good. This is the possibility that we might move to the upside. So make sure you're reviewing all this, understanding SPX game plans posted, and we'll go ahead and move on to 0DT. So SPX 0DT, we are call dominated. So again, the first step in repairing sentiment and structure is changing from put dominated to a call dominated environment. Negative gamma environment, highly volatile, very difficult to trade. Call dominated environment, positive gamma, dampened volatility. If we do see the VIX come down a little bit, then this is where I like to look for supportive type action on any pullbacks. So again, we have large round numbers, we have transition levels. We've talked about transition levels extensively here at GammaEdge and what they mean. I want to see spot price cross above those transition levels, positive transition levels into the call dominated environment. That's the opportunity where spot price can appreciate very rapidly. So watching those transitions is extreme importance, as I already posted this morning. So again, understanding moving into the different environment, at least on 0DTE, but then we can use the delta balance chart to look on out in time. And we can also use the web app. You can click those expiries on and off. See if those put dominated days, Tuesday, Wednesday, Thursday, Friday, are changing to call dominated. If they are, then there's an opportunity that this could be a sustainable move. If they're not, then obviously it's going to be very difficult for price appreciation due to the amount of negative delta and in the money puts overhead. They're going to be hard to overcome unless we have significant out of the money call speculation from call speculators. So again, watching that via the vol-m/vol-d command intraday helps us understand what market participants are doing, where they're speculating, and to what degree or volume they're speculating as indicated by the vol-m/vol-d command. So net stat command, very important for today, gives us the highest sensitivity levels that we're going to be looking at. 5600, very round level, left-hand plane strike, understanding that any pullback to 5600 may be an opportunity to get involved long in the market, depending on what the CT is looking like, the MTM, as well as the vol-m/vol-d command. To the upside, understanding where net Vanna and Gamma is the highest sensitivity. We've discussed 5680. We'll look at the trading view chart here in just a minute, setting up our if-thens for the day. So for today, obviously call dominated, drunken sailor range outline, DEX transitioned outline, GEX transitioned outline. We see that major confluence there, 5650, 5665, or 5655 that we'll point out here in just a minute. So moving on to our thesis for today, I like to do this pre-market. I have the SPX spread X, which basically is telling us the implied open at 5635. So then we'll move on to our if-thens. This is the SPX game plan. They're a nice, concise chart so I can mechanically execute today. When I reach those levels, you can turn alerts on in TradingView. You can turn alerts on in your broker, however you want to do that as we cross these levels, or you can just put a price alert or price trigger to get that notification when price starts crossing. So for today, 5650, extremely important level. I've already outlined that this morning. DEX transition, GEX transition, negative GEX is there. This is the full complex overlay from the morning run. I went ahead and overlaid out on my chart. So getting above 5650, I'd anticipate price appreciation towards this 5680, and then we'll see what happens. All bets are off when we reach the top of the drunken sailor range. This could easily get rejected very quickly and then move back down towards 5650, or we could move above the top of the drunken sailor range and move on out towards 5700. So again, I have our game plan for today, 5680, top of the DS. If we do see some dealer adjustment bars, positive slopes on the column put centroids in vol M and CT is in confluence, then I would take a long above drunken sailor range towards 5,600. Again, this is just my personal opinion. You are your self-directed trader, so however you do that, we are not responsible for that, but this is just our thesis for today. Short 5680, 5670. So any rejection as we move up towards the top of the drunken sailor range, understanding that negative trends is there on full complex, it's going to be difficult to overcome those in the money puts above, probably on the first move, maybe on the second move. So we could see some choppiness up here at the drunken sailor range. If we do start to fail, then an opportunity to short back down towards the top of the GEX transition. Quick trades today, as you can see, very narrow ranges and transitions. So we'll continue to keep our size down and manage risk appropriately. So then I'll go through the rest of these. Obviously, we have to, at the minimum, get above transition. I can't stress that enough. We're at 56.35, 56.39 pre-market here, implied open, but we have to move above the transition in a call-dominated type look and then towards the top of the DS. Understanding that all of this is within the DS and is probably going to be choppy, but for me, moving above this and holding transition really is kind of that first step. If we do fail the transitions and do not get above it, then obviously opportunity to short back down towards 5620 and then ultimately 5600. I'd anticipate that to hold at this time. Due to the confluence of in-the-money calls, just a large round number. If we get below 5,600, then obviously we'll probably have some other outside forces and structures moving against us, and I would be a little bit more bearish as we move below 5,600 down towards the bottom of DS at 5,675. And then if we lose the bottom of the DS, then obviously something has unraveled fairly quickly in the overall sentiment and structure. We're probably going to be in for some more weakness down, towards 5650. Not anticipating that today with where we're coming in at the overall look right now. So if thens for today, laid out pretty easily, but getting above, I can't stress that enough, I guess, getting above transition, utmost importance here early on for the morning for us to have me or us here at GammaEdge to have any bullish sentiment or a look for a move up towards the top of DS or even above that. So we'll see how it plays out. We'll be live in the room off and on here discussing the trades and what we're looking at in the overall option sentiment and structure. So let's make it a great day, everybody here. And if you have any questions, let me know. I'll be in the Discord in just a few minutes and I'll get this video posted for everybody that was late. Thanks.